You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
I think it's going to be a great year for gold and gold mining stocks. I think silver is going to especially shine brightly, as it were, in 2020.
Welcome back to Mining Stock Education. I'm Bill Powers, your host. Thank you for tuning in. If you want to engage the show with questions, comments, or feedback, you can reach me at bill@MiningStockEducation.com. Well, we'll be speaking with mining fund manager Dave Kranzler of Investment Research Dynamics today. Dave is also the editor of the Mining Stock Journal and the co-producer of the Mining Stock Daily podcast with Trevor Hall. But first, I'd like to thank Lumina Gold for sponsoring this show. Lumina recently closed a $9 million financing in which mining legend Ross Beatty bought over half of it. Ross controls now about 20% of this company. Lumina is advancing the 13th largest undeveloped gold deposit in the world and the largest primary gold deposit in Ecuador. Its project contains almost 17 million ounces of gold in the indicated and inferred categories and has substantial copper byproduct credits. To learn more, go to luminagold.com, and you can find the company under the ticker LUM in Toronto and under the ticker LMGDF in New York. So Dave, welcome back to Mining Stock Education. Happy New Year. And as you survey the junior mining sector, what gets you excited right now?
2020 gets me excited, Bill. Happy New Year to you. Thanks for having me back on. I think it's going to be, knock on wood, but I think it's going to be an exciting year for precious metals investors. And I think that the run-up that we've seen in the price of gold since July is that's just for starters. And it's not going to go in a straight line. It's not like Apple stock or tech stocks. But the precious metal sector does benefit extraordinarily from the record level of money printing that's going on right now at the Fed. And in fact, you could argue that the price of gold, which started taking off in July, likely that was the market, telegraphing that the Fed was going to have to restart QE and abandon hiking interest rates this year, or at the end of 2019, which obviously that's how it played out. So, I think it's going to be a great year for gold and gold mining stocks. I think it's potentially, again, everything I say on here is contingent on, rising prices in gold and silver. It's not guaranteed, but I think silver is going to especially shine brightly, as it were, in 2020.
When you look at, I believe a couple years ago, you talked on this show about John Brimlow's gold jottings and the Hulbert Gold Newsletter Sentiment Index. What are you observing in those two resources?
Right. Okay. So currently the Hulbert Gold Newsletter Sentiment Index is at a very high level. It's run up quite a bit in the last 4 weeks. And I think the latest reading is like 60. It got up to 65 earlier this week or late last week. And usually when it gets over, say, 55 or 60, there's a correlation there with a sell-off or a pullback in the sector. So by that measure, and we've run up a lot in the sector. I've got some junior stocks that I recommend and that are in our fund that have doubled in the last 3 to 5 months. So there was one stock that basically tripled since I was pounding the table on it below 10 cents. And one of my subscribers asked me if they should take profits or let it ride. And I was like, look, man, you got it almost a triple in this thing. At least take your investment out and let the rest ride for free. Anytime any stock goes up 300% or close to 300%, I think you got to take some money off the table because there's going to be a natural pullback, even if it's just technical. So what is really kind of mind-blowing to me right now, though, is the rapid run-up in the open interest in COMEX gold futures. So I guess for me, what's the most staggering number that I look at and connected to the gold market right now is the incredible run-up in COMEX gold contract open interest. It's almost at 800,000 contracts after jumping 14,000 contracts on Tuesday. So you're talking about there's almost 80 million ounces of paper gold outstanding on the COMEX versus 8 million ounces or 8.6 million ounces of gold that is allegedly held in the COMEX vaults. And of that, 1.3 million ounces, and these numbers are as of Tuesday, 1.3 million ounces have been designated as available for delivery. So you're looking at a situation where a derivative contract represents almost 70 times the amount in terms of paper gold of the amount of physical gold that exists on the COMEX. And there's never been any futures market in the history of the universe where the difference between the open interest and future contracts and the amount of underlying physical that's available for delivery has existed. This is just, I mean, this is outright, it's a fraudulent market at this point, and it's just kind of laughable. I have no idea how that thing's going to resolve, but it's it really speaks to the effort that's being put in right now into the market to try and slow down the rate of rise in the price of gold. And eventually it's going to backfire on them.
And they can't necessarily contain it fully, because there was an article out I read within the last week that said, I believe it was in 2010, that even though the commercials had their short positions in place, gold rose like, I think it was 50% or something, while the commercials maintained this large short position. So, I mean, how can the average person that's just trying to make a buck, trying to time when to enter maybe a junior mining stock, how can they take the data of the commitment of traders and use it, to time when they enter and exit positions?
Well, that's a whole other issue. But just, you brought up 2010. I mean, the open interest peaked back then at about 650,000 contracts. And that was occurring at a time when the price of gold was at a lower price before the run up. The open interest started actually going down in that final run up to 1900. So, and right now the open interest in paper gold is about double the long-term average open interest over, say, the last 10 years. I mean, it's just it's just a farcical market at this point. But anyway, to answer your question, and that's actually a really good question, because, and I see it a lot with my subscribers, is people agonize over, a few cents between the bid and the ask, or when they're going to enter an idea, or when they should exit. And I mean, quite frankly, you can try and time the market if you want, but, with these juniors, in terms of, a junior exploration stock is basically an option on the future potential of the property, right? Mm-hmm. And so you're looking at, it's referred to as the optionality of a project, or I call it the optionality of the stock. A lot of them trade at 20 cents. That's a way out of the money stock option, and that's the way you got to look at it. So it reflects the expected value of the property, or the probability that a discovery is going to be made. And you're talking about stocks that have, under $50 million in market cap. And if a discovery is made, and it's a significant discovery, eventually that's the type of stock that can, have a $100 million, $200 million, $300 million market cap. Silvercrest Metals started out with, again, I don't remember how many shares were outstanding, but, it was 16 cents, and the market cap was probably around 25 million back in the beginning of 2016 when I first recommended it. And now it's got close to a $700 million market cap. And that all they've been doing at this time is drilling and making discoveries on the properties. So, to not, if you see an idea that you like, and again, know that in these junior mining stocks, it's a roll of the dice. It's a high risk, low probability endeavor until more information comes out, in the terms of drilling and all that other, everything that's involved in getting a property from a mine, from a piece of land, a prospective project, to being actually a mine, or getting it into de-risk to the extent that a large cap company looking to increase their reserves is willing to take a risk on it. So, I wouldn't look at the open interest and say, oh no, there's a gold smash coming. I don't want to buy this 20-cent stock because it might go to 15 cents. I mean, that's crazy. You're not, we're not going to be 5 cents right or wrong on these stocks. And that's why, I don't recommend, except in certain cases, overweighting or taking too large of a bet on a 20-cent junior mining stock or even a 50-cent junior mining stock. So, and I think it's just like, if you're worried about a stock going from 20 cents to 15 cents after you buy it, you probably should be buying large cap stocks.
Dave, selling a position when you're up, that is an issue I was considering today. I have a substantial position and I'm up 100%. So I'm asking myself, what am I going to do? What catalysts are on the upcoming that might cause it to rise further? Silvercrest, which you mentioned, after this huge run up, if somebody's just learning about this company for the first time, what would be your analysis now after Silvercrest has run up? And you mentioned the stock that you profiled in the Mining Stock Journal that has already run up. Do you think Silvercrest has more upside? And that stock you profiled, would you be willing to share? And does that stock have any more upside?
Sure. I mentioned Precipitate Gold, I think in our July. It was either when I came on your show in July or it might have been October actually. Precipitate, they've got a project that's a piece of property they were able to get a hold of that's adjacent to the Barrick Newmont. Well, yeah, Barrick Newmont. It used to be Barrick Gold Corp. The Pueblo Viejo mine down in the Dominican Republic, which is it's one of the largest and most profitable mines in the world. And I think it has a 15 or 20 million ounce resource. It's huge. And Precipitate was able, I guess Barrick tried to buy this piece of property. The property, Precipitate calls it Pueblo Grande. And I guess Barrick tried to buy it from the owners or from the company that was looking to sell it. And the company didn't like the way Barrick was treating them, or there was bad blood there between the two, and Precipitate was able to pick it up. And the geologists at Precipitate, including the CEO Jeff Wilson, who's a geologist, they think there's reason to believe that part of the source of the mineralization that feeds the Pueblo Viejo mine and deposit is underneath the Pueblo Grande property. And so, and again, it's it's a roll of the dice. It's not even a 50-50 proposition. It's much lower odds than that. But they've done a lot of prep work. They've been able to raise some capital to fund a drilling. I think, again, this is just from memory. The last time I chatted with Jeff, which was probably about 4 to 6 weeks ago, I think he said they were going to target maybe January for drilling, for sure in the first quarter of 2020. And this is the type of thing where, again, if they make a discovery, and the odds of that aren't great, but if they are able to make a discovery, I mean, this stock could go from, it's a 19-cent stock. When I mentioned it on Mining Stock Education October, was at 11 cents. So it's run up 73%. And that's because of they were able to raise capital to fund the drilling. And they've also identified with some pretty good geophysical data, some good targets. And I think the market has basically said, okay, we think the odds or the probability of a discovery being made on this property, especially given its pedigree being right next to Pueblo Viejo, has gone up. And so the market's repriced the stock at a higher level. When I was pounding the table in my Mining Stock Journal on it, it was below 10 cents. I mean, we bought some, I think, as low as 7 cents. So, so the stock's almost tripled. At a point, you got to take some money off the table on it. If you bought some down at 10 cents and it's doubled, I mean, I'd say take your investment out and let the rest ride, right? You basically got a free option now. So in terms of back to Silvercrest Metals, I mean, Silvercrest Metals, I mean, it's, again, nothing's guaranteed that it's ever going to make it to the finish line of being a mine, but it's I think after Juanicipio, it's probably the highest grade project, at least in North America, for silver. I mean, the silver grades they're hitting are just absurd. There's multi-thousand gram per ton intercepts in some of their latest drilling results, and they still have a fairly significant part of the property to drill. And SSR Mining has, I think it's a 19% interest in the company. Maybe it's 9%, I forget. But at any rate, they have a plan in place to put a mine in there, and it's the same formula that these guys used with Silvercrest Mines, right? It's the same CEO, and Eric Fear, however you say his name, and they put it. First Majestic didn't buy Silvercrest Mines until they had the mine up and running, and I think at the time, maybe Silvercrest Mines had a resource of a couple 100 million ounces, and now I think it's like 300 million. And this property looks like it's going to be bigger than the Silvercrest Mines, the Santa Elena properties. So, it's got basically a $700 million market cap now. Obviously, it's not going to go up 10 times from here unless the price of silver goes to 100, in which case it could easily go up 10 times from here. But I think you're looking, for instance, like Mag Silver has, I don't know what the market cap is right now, but it's $1 billion plus or minus. And I don't see any reason why this project won't be valued on an equivalent basis at some point as Mag Silver. So, you still have, what's that, about 40% upside here and a lot less risk. I mean, it's going to, with Silvercrest now at this point, it's going to move up and down with the price of silver a lot more closely than it did when it was, a penny stock. So, if the price of silver, like last week, the price of silver jumped and this stock ran, it was up over $1 at one point in a day. And we took profits on some in the money calls that we had when it was over $7. And then silver got hit and it fell back. So, now it's at 682. So I think it fell back down to around I don't know, I want to say like 630 maybe. And we actually added back to our position down there. So, if silver moves up over 19 over the next 3 to 6 months, which is a real possibility, the stock will be way over 7 at that point. So, and they're doing so much drilling that, in almost every time they release drill results, they have some of the holes have ridiculous silver values in them. Right now I still think you're looking at a significant upside to the size of the resource versus I think their last 43-101 showed maybe 90 million ounces, and they're going to release an updated one. I can't remember. I updated it in my mining stock journal a couple issues ago for my subscribers. And I think their next resource is going to come out this spring or something. I think they had just released some drill results at the end of December that they wanted to try and get included in there. So, this is, I almost look at Silvercrest Metals as, I put it almost in the producing silver stock category, although obviously it doesn't produce and there's no guarantee that it ever will. But, I like to think of it as like First Majestic, only with a higher beta than First Majestic is the way I look at it. So,
are you going to be focusing more on silver stocks this year, Dave?
If I find some good ideas, I kind of focus on, I get a lot of ideas emailed to me from subscribers, and I come up with a lot of my own ideas just based on, having been in this sector for almost 20 years. And sometimes some of the best ideas that I've come up with have come from subscribers. So, Mineral Mountain Resources being one. But again, I try to, I spend a fair amount of time just looking for good silver stock ideas. And that brings up another point, because there's been a handful of stocks that have like silver in the name, or the company promotes themselves as a silver producer, and but when you dig into the details of what they've got, their resources, the bulk of their resources silver equivalent, and a lot of times especially with some companies down in Mexico where there's a lot of polymetallic deposits down there and mineralization. You look at these things and it's like this is mostly lead and zinc, and maybe zinc has good upside, but lead's going to be tied to the global economy, and the price of lead's probably going to go lower. It's not really a silver explorer. It's a lead and zinc explorer with some silver in the resource, and they've restated the resource so it's in silver equivalent to attract investors. So you got to be careful with things like that.
A winner that you had featured in the Mining Stock Journal this past year was Minera Alamos. That stock is up significantly. Can you talk about when you recommended it? And this is another example. Does this stock still have upside? What's your perspective here?
Yeah, I had a colleague that had been bugging me to look at it, and I finally got around to looking at it in July after it had run from roughly 7 cents US up to 12 cents US. And I just kind of looked at the things I look at, where the market cap is, where it's been. It's got, at the time it had, 330 million shares outstanding, which, I prefer to see new ideas, although this was a new idea for me, not a new idea out there. I want to see junior development companies with a lower share count outstanding. But, and that shouldn't be the only criterion. I mean, there's been plenty of stocks with hundreds of millions of shares outstanding that have had phenomenal returns. So anyway, I started digging into it, and I spent a bunch of time on the phone with the CEO, Doug Ramshaw, and who I give him kudos for. A lot of mining company executives are out there, and they're hyper promotional of their projects and their presentations and the way they present the projects. He's like the opposite of that. Like he's understated, and a good example is that the PEA that they have on their Santana project that's going to start up as a mine in the third quarter of this year. It uses 1250 in calculating the net present value, and he also uses, I think he uses a 7.5% discount rate. I mean, most companies, if they wanted to hype the stock, they'd put out a PEA, or they'd redo the PEA using $1,500 gold and a 5% NPV. So kudos to him for, like I said, he's kind of the opposite of promotional, and I actually really like it. It's refreshing. But they've got their Santana project, like I said, that's gonna it'll start producing in 2020. It's fully funded now. If you just take kind of their startup production, their first full year run rate, it'll produce about 65,000 ounces of gold, and at $1,500 gold and an $800 all-in sustaining cost, which that all-in sustaining cost will go down over time, it generates $45.5 million of free cash flow after all expenses, and I believe that also includes the Osisko royalties, NSR on the property, and after required sustaining capital. So you're talking about it's going to generate $45 million of free cash flow, and the market cap of the stock's $80 million. And what is even more interesting about this is that if the price of gold goes to 2,000 an ounce, then it's going to be generating close to $80 million in free cash flow, which is the market cap of the stock in 1 year. So to me, it's an extraordinary value play. I mean, I think this has Graham and Dodd written all over it if they were still around and investing. So, and then, the cherry on top is that they have another project, the La Fortuna project, that's slated to start production in late 2021, and my guess is it'll start a little bit earlier than that. And that has a PEA with 1250 gold after tax at an NPV, a discount rate of 7.5%. The NPV is $70 million. So you're basically getting, at $2,000 gold, you're getting Minera. At today's price, you're buying it, the equivalent of 1 year of free cash flow, and you're getting La Fortuna for free. So Is Minera going to be a 10 bagger or a 5 bagger from here? No. I mean, there was a point in time when that was the case. If you'd gotten into it when it was well below 10 cents, then from there it was a 5 or 10 bagger. But I would say, barring, again, the price of gold and silver going lower from here, I would say this thing over the next 12 to 18 to 24 months easily has another double or triple in it, if not more, depending on what gold and silver do.
And the 5 bagger or 10 bagger potential would come in if they successfully take the cash flow and then become a mid-tier eventually, right? That's where you could get a 10 bagger, but that's going to be more than 2 years out maybe.
I don't know if there's a 10 bagger in that. I think they'd have to take the cash flow and buy another home run project is what they'd have to do. I think the plan with the company as is eventually to ramp it up to 150,000 ounces of production. But, you got to also look at the average mine life or the mine life for each project. So, at some point they're going to have to find some more projects to start replacing it. But, what I would say is ultimately there's a chance they might even start paying out a big dividend if everything goes according to spec.
One company, Dave, as we kind of conclude, that you mentioned last time we spoke in October was Fortuna. Do you have any update on Fortuna Silver?
Sure. So that stock's up 21% since I mentioned it on your show, and it's run from the low threes. It's been as high as I think 430 in the last week, and it's trading at 404 right now. I mean, I think the easiest money's been made in that stock in terms of buying it as a contrarian play. It's going to vary more closely. After it's now been up 33% since it bottomed out, it's going to vary more closely with the price of gold and silver. And that's probably going to be a bigger driving factor now than any kind of market inefficiencies with respect to what's going on fundamentally at the company. Being able to capture any market inefficiencies. So, I think it's a good core portfolio holding, and I do think it's going to outperform a lot of its peers from here. But again, it's a large cap producing stock, and it's already had 33% upside in a couple months, and so I wouldn't have a table pounding buy on it unless it gets hit again for some reason, which it could. It could release some more quarterly results that disappoint the market. But again, I think it's one that you watch, and if you see it get hit more than the market, and there hasn't been any, meaningful news event that caused the sell off, I think you buy it on dips and sell some of it on rallies.
And I should say that all the stocks that we're talking about and the insights Dave is sharing, he only shares these publicly after his subscribers have had the opportunity to get into these stocks after he shares the idea. With that being said, Dave, any teasers you'd like to share about upcoming Mining Stock Journal?
Well, that's a good question, because right now I'm working on some new ideas. I actually put another larger cap contrarian new idea play in 2 issues ago, and that stock's up probably about 13% in the last month, or 6 weeks. And I think that one still has more upside. Again, it's going to contingent on what gold and silver do over the next 3 to 6 months. But I left out a lot of stocks that and I won't mention them because I haven't talked about them publicly. And some of them have moved quite a bit, and some of them haven't, but probably will. And so, those stocks get reviewed almost every issue, depending on whether or not they've had news flow. Because I publish every 2 weeks. So there's a lot of stocks that I haven't talked about that still have massive upside in them. A lot of junior exploration stocks where, good things are happening at the company.
And the website is investmentresearchdynamics.com. If you don't already know Dave's website, but you go there and you can easily at the top just click Mining Stock Journal if you're interested in subscribing. Dave, as always, I appreciate your insights and thanks for talking about these companies with me today. I appreciate it.
As always, it's my pleasure, Bill. I appreciate you having me on your show. I think it's a benefit to people who want to invest, especially in the junior mining stock sector.